Assalamu alaikum. Welcome to my presentation. My name is Tanjim Alom Turjo. My I number is 22 on 0837 on 8. And today my presentation topic is Bangladesh Bank latest monetary policy. Bangladesh Bank recently introduced its first half of monetary policy for the year of 2025 in January, and they mainly focus on inflationary pressure, foreign exchange market volatility, and need to sustain economic growth. That is why they adopt that tight monetary policy to restore the economic stability. And their primary object is to control inflation, support economic growth, and stabilize exchange rate. Bangladesh Bank want to reduce its inflation to about 6.5%. And while controlling inflation, Bangladesh Bank also want to support the economic growth, and also Bangladesh Bank stabilize the exchange rate because the tech is depreciated day by day. So that is why they want to stabilize the exchange rate. So we can see the compare of monetary policy from 2024 to 25. So they increased 50 basis point. In 2024, the policy rate is 8%, and in 2025, the policy rate is 8.5%. And standing deposit facility is 6%, 6.5%, and at 2025, it is 7%. And lending facility is 9.5%, and at 2025, it is 10%. So we can see the policy rate hike by 50 basis point. So which kind of tool Bangladesh Bank use? So Bangladesh Bank use the most popular policy policy rate, open market operation, statutory reserve requirement, interest rate corridor, and exchange rate policy. So for first one, the policy rate, there are two kind of rate. The first one is repo rate, and the second one is the reserve repo rate. Uh, Repo rate mean the rate at which Bangladesh Bank lead to the other commercial bank. If it rise the repo rate, so then the fund get costly and thereby slowing down the inflation pressure. And reserve repo rate, it means Bangladesh Bank borrow from commercial bank to absorb the excess liquidity. The second one, open market operation. It involves buying and selling government security to control the inflation whenever Bangladesh Bank want to reduce the money supply from the economy. So they usually sell the government security, and whenever they want to increase the money supply, they buy the government security from the economy. The third one is statutory reserve requirement. So there are two kind of. First is the cash reserve ratio, and second one is statutory liquidity ratio. For the cash reserve ratio, it is the mandatory fund that must be kept with Bangladesh Bank. And for statutory reserve requirement, it means minimum liquid asset holding that bank maintain and influence their lending capacity. The fourth one is interest rate corridor. Bangladesh Bank implement a structure IRC with the rate as a midpoint, and SLF as a ceiling, and HDF as a floor to guide short-term interest rate and stabilize the monetary money market. And the fifth one is exchange rate policy. Bangladesh Bank implement its market-based and managed exchange rate has replaced earlier most rigid intervention, offering both flexibility and stability. So suggest monetary reform, extending central bank autonomy, improving monetary policy transmission, reducing non-performing loan, enhancing transparency and communication, financial market development. So Bangladesh Bank take those suggested to reform its monetary policy. So which kind of recommendation they give for the standing central bank autonomy? Its recommendation is amended by Bangladesh Bank Order 1972 to prioritize price stability as a primary mandate, following model like the ECB and Bank of England. And this justification is greater independence which enable Bangladesh Bank to respond effectively to economic shock without undue political interference. And its second suggested policy reform is improving monetary policy transmission, and they recommended develop deeper monetary money market and improve financial literacy to enhance the transmission of monetary rate. Example, India monetary policy framework agreement South Asia use the real-time repo option, reducing non-performing loan. Recommendation, enforce striker loan classification, increase provision and enhance supervision and oversight. Data point, NPL ratio is state-owned banks remain about 20%. And if we see the fourth point, increasing transparency and communication. And they give recommendation is publish quarterly monetary report, inflation outlook, and maintain consistent communication challenge with the public. Global practice is the US Federal Reserve, the Bank of England regularly publish minute and forecast to improve market understanding and reduce uncertainty. The fifth recommendation is financial market development. Promote development of secondary market for government security, expanding the repo market and encouraging the use of interest rate derivatives. And its impact is this will increase and improve the policy rate transmission and deepen the monetary policy toolkit. So now, if we see the conclusion, so we can easily understand that Bangladesh Bank new money pen or monetary policy tied to control the high price, keep the value money steady and high economic growth. To do this, they raises interest rate and made it harder to get loan. It also made some changes to manage how much money is in the system. Those steps are helpful, but more work is needed. This gives the bank more powerful flexibility and loan, improving the way bank and money market work. This will help country economy and stay strong and stable. So that's it all about my presentation. Thank you very much.